All right, we'll get it started. Um, so this one's gonna be a long one, a really, really long one. Um, I know I've had individual little lessons on like all the topics I'm gonna be discussing today. Um, so we'll first discuss like the basic idea of auction market theory, or at least like not the most principal thing about it, but sort of some of the rules that come along with it. It should help build a basic understanding of why I look for trade where I do, and sort of the way I view markets. Um, and then we'll go over, I guess, plotting out the levels themselves, sort of the discretion behind that, because it's really not cookie cutter, although it might look like it. And then we'll go over sort of building a plan, uh, and then we'll go about, executing that plan or executing elsewhere throughout this session. And then I'll give room for questions after each little segment. Try to make it, I guess, the questions like focused on that segment. And then at the end, we can do sort of, broader questions and whatever you guys are wondering. All right, well, we'll get started. This is, I've already gone over this before, so I'll run over it quickly. If you want like a deeper, more longer, um, little presentation about this. It's already up on my YouTube, but we'll run through this quickly. So essentially, mostly markets are going to be balanced, right? And right here are just a couple examples, and you can we can go back. This is a daily chart, and we'll see. Yeah, you got multi-day, multi-week balance here, another multi-week balance here, and then we're really only trending. Um, I don't have a statistic on this, but you're trending less than you are in a state of balance, um, right? But we still trade intraday, and we still find opportunities every single day, right? With the levels with the levels we get, and then obviously the breakouts are gonna include more of those trend days and such, right? Or when we reach the extreme part of the balance, we get larger moves off of those, right? So for example, you got each individual session here, you get overlapping value, uh, and you come up with a 5 day balance, right? With the bulk of the value being built, arguably here. Um, and usually value area low and value area high. This is simply just your 70%, where 70% of the action takes place, right? If we're looking at the TPO, or I guess time, right? And the shelves specifically are just a little bit off, and sometimes I prefer looking at the shelves, right? That where volume, or where the TPO really starts to taper off, as opposed to the literal value area high or value area low. Okay. So here are just a couple rules and concepts. Um, Price recently accepting into value will attempt to traverse the entire value or balance. So, right, when we're talking about this session here, or this is one session, this is another session, right? The following session. So you have this balance here, or this profile here, and you have value area high, value area low, session high, session low. When price trades back into value, this isn't the greatest example of it, but when price trades back into value, the idea is you trade back to the opposite end of value, right? That becomes the ultimate goal, barring like a reaction off of the point of control, which you do sort of get here at the low of the C period. To try to take it back out, you ultimately fail, and then you trade back lower. You get the reaction off the lower end, right, to try to keep this within value. Right, you get the pop back up, but ultimately ends up failing, and then traversing the entire sessions range. Not always going to be like this, but this is the basic idea. Right, when you accept into value, you'll attempt to traverse it. So when talking about value, I know this is just one little example, and the more we talk about this, the more you'll see this. Um, we can think about value in terms of where, in this case, where time is where we're spending time trading, or what I like to do or prefer to do is where we spend volume trading, right? And then work with balances in that regard. And then price accepting outside of value leads to continuation of the trend. So, right, here's your little area of value. There's your value area high, right? You open a little bit below, you get an opening drive that, pulls back, tests some levels, right? In this case, the prior session's high and gets going, right? Outside of value. And these are just very, very simple examples, right? There's obviously going to be more stuff to the left of us that sort of maybe might influence this decision or this idea, but you can get the basic idea. When you get out of value, the idea is you go into price discovery mode and look for value elsewhere. And then price often retests areas where balance or imbalance, the shift occurred. This is why, like, I really like buying pullbacks into levels, right? Because, right, similar. This is the same example. This is that balance, that one session, and then the following session. You get a retest of that high, right? So when you retest levels, it makes it very simple to come in and say, okay, this is a level that in this case buyers would like to defend, right, and whatnot. So you'll see a lot of examples of that, especially recent price action. Right, another example, right, of breaking out of you started within the bulk of the balance. You got the breakout. Now you're retesting that prior high, right, or excess high. And this is sort of the first concept we covered. Expect more of the same until otherwise, right? So markets are going to be balanced more than they are trending. So when you're in a state of balance, like these 3 sessions here, expect more sideways until you, right, see a reaction off whatever we're paying attention to go outside of value. In that case, you go into price discovery mode. You go into a state of balance here, right? Breakout, test some prior areas of value, continue the breakout, more balancing, and go from there. And price often trades back to prior areas. Oh, yeah. So this is the other concept we've covered, but this is just an example on the daily time frame, right? Like on this big massive pullback, where's your pivot low? Right at your point of control of this prior area of value. And I know this is a composite and including this volume, but right, that's the general idea. And right, even on these little tests here, on these pullbacks, you do test prior areas of value where you get that reaction, right? Even at these pivot lows where we try to hold, ultimately end up failing, but you get the idea. And then you get choppy action in the middle. Well, people call it choppy. So if we're working with, let's say, this, where the bulk of value lies, right, and you have your level here and level there, the idea, let's say A period opens within and your B period push up fails up into this level, the idea is you stay in balance and eventually will resolve down to the lower end. And if you can't break the lower end, you're going to repeat that cycle and try to trade back up to the upper end. So in this example, we look for execution. We look for our trades here and down here. Right? When you're in the middle, when price is in the middle, it's hard to make a decision, right? Or it's hard to get involved unless we're basing it off of the idea of a recent reaction off of one of these ends, right? In which case, you go to whatever form of execution or other form of TA you use and say, okay, we got moving averages here, you got VWAPs here, you got, IB highs, IB lows, or an anchored VWAP here, and can sort of help make a decision, right? If we're ever trading in the middle and you want to get involved, and you'll see that sometimes from me when I, let's say, miss a trade off of one of these extremes. And then time spent towards one side of the balance can lead to a break or continuation of the prior trend, right? And this is simply just taking this little period of time and just focusing on the idea that, yes, you spend one session, you try to push higher, and then one session tries to break out, fails, ends up building value lower. Subsequent sessions then build value lower, and then eventually leads to that breakdown. Right, once you start spending more time towards one end of the balance. Um, Not all opportunities or levels are equal in risk to reward. So we can get a lot of levels, or you can pay attention to a lot of levels. Main thing is like just understand where your most important levels are. Um, and like in my outlooks, I like to keep it somewhat clean and then try to uh, minimize like the number of levels I have. But when I'm looking at a volume profile there and such, there are so many levels that like I can watch for a reaction, although it might not be the most important level. Um, I just prefer to pay attention to the most important ones and look for trade there. Right? Not saying you guys can't. So that's a little background or a couple set of rules and ideas based off of auction market theory that if you sort of understand the main concept of probably the most important is working back into value and working away from value. If you understand that concept or start to get that, we'll go over a lot of examples very shortly, but um, a really, really good starting point. And this is going to be the basis for a lot of why I do or why I trade where I do and why I target the levels I do. Okay, any questions regarding this specifically? Or are we okay for the most part? Any comments on point of control? So yeah, you can get a reaction there. I briefly, very briefly mentioned it here, but um, typically when you're working with a point of control, like it's typically going to be within value, right, for the most part. Um, and can we get a reaction there? Yes. In some instances, I do choose to pay attention more to the point of control than I do the edges. Um, and sometimes the point of control can give you that reaction that sort of breaks this rule or idea of traversing the value. So in that regard, yes, we do see reactions off of the point of control. Right. And yeah, I focus on the volume profile one more. Because the time profile one, like you're gonna have like this example, no, but you're gonna have like three or four at least. If we're looking at this is like a 4 tick profile, but you're gonna have multiple places where the time point of control is, and I prefer just watching the volume profile one. Okay, so plotting out levels themselves. I need to go to Sierra for this. Everyone can see Sierra now. Okay. So plotting out levels themselves. Right, we talked about this idea. We'll just go over some examples. So, like, right, if we're given a profile that looks like this, this was simply Wednesday and Thursday's profile combined of last week, right? And this is the 2025 composite profile on the left here, and then this is a much longer term composite profile of, this spans about 2 years, but right. So we're looking at this profile, and yes, you have your value area high there, you have your value area low there. Where are where's the bulk of value being built, right? Where are we spending the most volume trading, or where's the balance, right? And we look at the volume profile here, or look at this volume profile here, we can say that arguably it's around this 90 to sort of down to the 75, right? Where the bulk of the action takes place. Um, and we can maybe throw in that 99 up there. We'll just call it 6,000, where that small shelf is, right? Where it, after it begins to really taper off, and maybe we get a reaction. I'd prefer it off of 90, but that's just there, just in case we do try to pivot there, just so that I know where we're trading. Not too much down here. At least looking at these two profiles combined, we're looking at the composite here, right? You have that sort of shelf there, and we can say that you have another area of prior value sort of established here. Maybe it's something we want to watch, but since we already got the reaction off of it, I'm not, I'm sort of choosing to leave it out and just watching this high volume node at 50, although probably a high volume node only because it's a psych level. And right, so we get that established. So, on a pullback down into this area, I'm looking for reactions off of the gap, maybe, 99, maybe, preferably 90, right? Like, to me, this is, I think, a better level to, if we're going to limit long and choose only one of them, I would prefer doing it at where most of the value was being established back here, right? Because this is where the bulk of your balance is. But we start trading into this range, or let's say close this gap, start trading into this range, and if you're looking to be a seller here, like, if you're looking for shorts up against this, let's say you fill the gap and work a little lower, and you get the failure back over like this 04 level. The idea would be to short it back into the lower part of this range, but at the same time, you have to be wary of this level at 90, maybe this level at 6,000. It's not as important as this level at 90, but you do want to be wary of what happens once you trade down to 90, right? Let's say if you're short up here or short from anywhere higher, holding runners, because this is where I think buyers are going to look to want to get involved. And if we accept back into this, right, back below this 90, then yeah, we'll likely go see 75, possibly even lower, right? But the idea here is, this is your value. If we accept into it, sure, we go lower. If we can bid off of it, go look for value elsewhere, which would be prior value in this case, likely up into this range again. Okay. And right, so we're doing levels here on the day-to-day profiles here. I usually start off with finding levels on the daily and then working from a much higher time frame. And when we're looking at something like this, I usually just focus on the volume profile, and I try to include everything to the left of us, at least the most recent price action that's relevant, right? So like for trading up in this range, right, we probably need a profile that at least extends back to this area. Okay. Maybe if we start pulling back lower, then you might want to do a profile that extends back a little lower and grabs this area as well, right? But for now, when we're trading up here, we really only need the stuff that's like up here, okay? And for example, like if we start trading much lower, let's say like past these lows down here, then I'd start focusing on levels from all the way back here, right? Maybe just can go in a little bit and simply focus on this area. But so that it can be a little crazy looking, if we're doing a profile like this. But even with this, we see little pockets of value and areas of value. So arguably, right, if we're keeping it simple, we have that one big area of balance, of value. Okay. And then we can come in and say, okay, this is sort of two little distributions. This being that lower one. And then this up here being sort of the upper one, right? And we can also come in and say, oh, this is sort of three distributions. And, you got one main one down here, although this one can even be divvied up into two, right? And these sort of two up here that are a little smaller, right? Just due to these couple of sessions traded here and these couple of sessions traded around this range. So I like to just start off with the bigger picture and work that way. And then of course once we get that established, I'll go into, maybe a profile of just the most recent leg down, in this case from the rollover, right? Or we do a weekly profile of just last week and say, okay, like, do we have anything from these two profiles that sort of help or strengthen some of the ideas we get from this, right? And that's when, like, if they do, levels become more and more important. um, right? So like in this case, right, last week you had essentially a triple distribution due to the two gaps. But even on this triple distribution, you'll see that the bulk of the value traded there is at like that 90 level, right? What we just talked about on looking at the TPO, right? The same area down here. Right. So the idea now, let's say, if we look at this profile up into this last low, this is where your shelf was, right? We traded down, closed the election gap, didn't quite trade down to value, this area of value down here, which is like where I really wanted to get involved along at the upper end of this. Didn't quite get there, just closed the gap and went higher, right? Reclaim this, the lower end of this, which is the most important thing to do. And then at that point, like, obviously the main idea, if we're keeping this balance simple, is target the upper end. Okay, at 6101. Even in this case, like, we have or some of you guys talked about the point of control. There's your point of control, and this is a profile. Oh wait, let me make sure. Yeah, this is a profile up into this low, so it's not including any of this stuff that we saw last week, right? So you have your point of control here, which I made note of in the daily outlook, was also your overnight or pre-market high on this session when you popped up. Let me pull it up here. Right, this 615 was at high when we worked higher overnight, and then eventually resulted in a pullback. Did it result in us trading down to the lower end? No, you traded down into some support, right, which we got swing long off of, right? But that's an idea there of, well, you'll get reactions off of the point of control, right? But the main idea with this area of value is acceptance back into this, or failure to go below this, and you'll eventually try to traverse this back up into this, right? 6100. That's the simple idea. And then obviously, like, we sort of delve deeper into this and say, okay, like where's the bulk of this value being traded? And we'll just go into last week's profile, or this like downs profile, not including last week's, and say, okay, like we got back over 33. Arguably, like this is sort of your area of, you got value area high, value area low, but don't think that makes too much sense. You have the bulk of it arguably being traded here, right? With this being like the shelf, you get the lower shelf, upper ends, yeah, a little iffy, right? There's no like clear cut level as you would see in up here or down here at this 33. When we do that, it can get a little difficult. But at that point we go into maybe the profile of these two sessions and sort of, or these couple of sessions appear and say, like what levels do we want to work with? Um, right. So that's how I plot levels for the most part. Reese, you asked a question about zones versus levels. So zones, obviously this is a zone, but I think you're specifically referring to zones like, let me move this real quick, like this, right? These smaller zones that are maybe like 5 points on ES and like maybe like 20, 30 points on NQ. Um, I usually do that when I don't have a clear cut level, or when I'm working with maybe multiple levels that are really close by. Uh, like in this case, right? I could, maybe we could move this up a little and work with. I'm working with just this. Oh, where'd it go? Okay, the excess from this session, right, at that like 74, 75s. And then if we merge it, we'll see that that's sort of where that value really starts to kick in, or that volume really starts to kick in at like 79s, right? So um, I'm expecting a reaction somewhere in the zone, and that's, I think, what you got today. Yeah, that was your high, right? Or like if I'm working with, like something like this, yeah, the idea is it's a zone, but this is a zone that we can work with in terms of, okay, we watch the high and then the low of that zone, right? So like in a zone like this, I'm not averaging into a long position, right? It makes sense. If it's a zone like this, I might be, or you could look to short into these 3 points here, right? So if it's a big zone, if we're talking about, you know, well, I don't want to make this confusing. Um, yeah, big zone like this. This is a balance, an area of value, right? Probably don't want to make it a zone and simply just watch the high and the low. But if we're working with zones like this, like I thought this range was small enough to where like I'd rather just keep it a zone, and instead of focusing on 67 and then 60 separately. Uh, when you have clear cut levels like this, like 44 down here, when we're looking at this session profile, uh, those are going to be levels. And if we're looking at excess or session highs or just shelves in general, those are going to be one level. That those keep it easy, but like we can go over an example on NQ over about a zone, right? Like this zone here, 610s, 625s. Like, do we really want to, like, can you make this two separate levels? Sure. I just like to just keep it a zone and just think of it as a general idea as opposed to two separate levels, right? Like, if this was big enough to where, like, it looks something like, or actually, we can do this. We'll go down to 1 minute here and do a profile. Oh, we already have one. Um, right, so that's where the bulk of value is being traded, at least in this session profile, right? And you can watch the high and the low, where that lower end comes in. Right, that's where you're most likely going to see the reactions or the pivots, and or maybe we can even like divvy this and say, okay, there's like that really where the bulk of it is 25s to 17, right? And that's where the open rejected off of, couldn't stay above it, traded back down to the lower end where we start to taper off a bit. This zone wasn't in my outlook, but right, we trade down into the 520s, 530s, and right when you trade back into it, you struggle a bit. It's not gonna always be perfect. But when it's something small like this, like a 10, 15, 20 point range, I prefer making it a zone. And at that point, like, you really don't want to, um, you're really trying to just look for, I would say if you're trying to keep your risk very tight, you'd still look for the reactions off of the upper end or lower end. Obviously, here it might chop you around, right? Like when you fake this break higher, you're flagging back into it. Might, you know, might have to take a stop on that one, but when you trade down into this, it becomes a little more clear, right? And you're getting decent reactions off of these, and you fail to go higher here, but in this part, when you do get that volatility and volume back in, decent reactions off of the lower end there. Um, and like a recent example on NQ of a big zone is 235s, 180s, this high volume node on the composite. Can we make this two separate levels? I think so. I just chose to kind of scale into this 50-point range. I know it might be a little hard to do if you're on a small account, or if you're trading on a prop. I actually really couldn't do this on a prop because closed into this level. Um, right, but something like this, you could probably make two separate levels and just focus on 235 and then 180 specifically. Uh, like, if we ever pull back to it again, I'm going to watch 235 specifically. I don't think I'd want it to trade back down to 180. At that point, like, you'd be trading into, yeah, a pretty weak low, right? You got to test there, test there. Do you really want another test of 180? I think I'd rather see 230s hold if we have to pull back down there. I don't want to see it back down there, but um, could you elaborate on how you draw your levels around low volume nodes? Low volume nodes, I prefer, well, in essence, like if we're talking about shelves or where the bulk of value is being traded, and you come up with, let's say in this example, you come up with 44 down to, the idea would be this is your value down here, or area of balance down here, and up here, a little iffy. You could say that most of the volume starts coming in here and sort of tapers off after that, right? Get rid of that for now. Right, that's sort of the general where most of the volume is being traded. So in this example, like this would be your low volume node, right? Like in between. Um, Regardless, we're still looking off for the reaction off of prior value. So yeah, your low volume nodes will be relatively close to your where value or the edges of value. So I don't really like focus specifically on like low volume nodes. It was actually a low volume node example recently. On ES. Right, if we go into some of these lows here, down into before last week, you have this really low volume node here on the composite, right, at like 68. And I was like, should we pay attention to this? Should we not? Or should we just focus on, this upper end or lower end, or in this case, the lower end of this upper area value, and then this upper end of this lower area value. And, like, I think you just focus on the edges, right? As opposed to this this one little level in the middle. So I don't really focus too much on low volume nodes. The only time I note really, I guess technically low volume nodes are when we have single prints, right? Um, and these are areas of just poor structure and potentially trapped traders. So, like for example, up here, you're typically gonna have no volume in this range, although technically volume like the shuts off or starts down here at this 12s. But even in this case, like if there's something on the composite, like a high volume node, like in this example at 15 that we did see a reaction off of, like I'm still looking for reactions off of where you have some kind of value here, here, and where you have no value. Right. So I'm expecting the reactions off of the extremes, even in this example. I mean, I wonder if you get decent reactions off of it. Somewhat, but these single prints aren't typically something I like executing around. Like once we get into them, you kind of have to be like in this example, you got the single prints to the downside. So I would be a little cautious on a first test into it. This example helped in that like you had that high volume node on the composite at 15, which was like a marker in the middle that I think uh, could have really helped make that decision. I think I even noted it on for the outlook into the 16th. Uh, Upside, yeah, poor structure above us, 0529's high volume node at 15, a level within, right? Watching the extremes and the single level within carefully. So the first test of single prints, yeah, you do want to be careful. And if there's a level in there, like it can help drastically. And second test of that, you get the partial fill of those singles and likely go test the upper end next. And I think NQ did the same thing with a set of singles. He actually came very darn close to filling them one pre-market session, and then you basically cleaned it up because this overnight session you traded up to like 680s, right? And then subsequent test of it has no issue getting through. Any questions on just levels themselves? A little off topic. How does your Syria chart run so smooth with that much data on the volume profile? My computer is not that crazy in terms of specs. It's actually pretty shit. So I don't know how it runs smooth. But I have a lot of data loaded on this thing. It's probably like, I think 2 years each. Almost. Anything with particular with the setting? I don't know. I haven't fooled around with any settings on Sierra. Um, Might have to do some digging on in the forums for that. Do I use single prints? I mean, I sort of just discussed the basic concept behind them. I don't like to. I'll use them for exits if I'm in a trade. I don't like to base a trade off of it, if that makes sense. Like I think there's a, singles during the overnight session I really don't care about. Yes, this session will be recorded. Time for a couple other questions, and then we'll move on. Thank you. Donald Trump is. Are we still open? Oh, okay. Poor structure repaired overnight. Is that significant? Like, yeah, once you get through them, or once you see those levels overnight, I think in terms of singles, yeah, that idea sort of becomes invalid in that, like, you have those potentially trapped traders with, above or within it. So that's why, you might see that reaction into the first test of singles. But I prefer looking at like where value is really being built, right? Like this example is like kind of poor in that like you don't have like that much value established here. I think they all got flushed out here and got out on the retest here. Um, but like in this example, like where's your value being built? 90, right? Like this is where everyone's likely positioned or, likely to get repositioned again. Yeah, single prints can be seen from the volume profile. Well, the literal definition you'll only like really truly get from the TPO, but yeah, you got like absolutely no volume here on this move down. Usually focus on RTH. Oh wait, let me do them in order. Everything you look derived from is from VP. What is the value add? They add a little more importance to some levels, right? So when I'm looking, well, this is actually, yeah. So this is your excess. Let's say, for example, it's 49. This is your excess. Maybe it's like 49 and a half. And you get that like taper of the volume shelf there, of the volume profile there at 49. So, if both levels from like the volume profile and the market profile add up, um, you know, I like to plot those out over, simply just like, let's say like this level here, this shelf there, and whatnot. Um, right, and let's say we get a spike end of day. Do we have a recent spike? Yeah, you get a spike down here, right? Like in this case, like, is there anything on the volume profile here that helps? No, but the idea of this auction into end of day, do we know whether this excess, right? The importance of a spike end of day, or importance of excess end of day. We differentiate it between excess and spike because we don't know if this leg higher, if this excess high. The idea of excess is it signals an end or potential end to that auction in that direction, right? So you left this excess into end of day. We close the session, so we have no way of knowing like whether this auction higher wants to keep going or not. So we look at this base the next day, or this area the next day, in terms of like, do we want to work higher? And in this case, I think you try to get the reaction off of the high a couple times. I think I even tried long at 71 or off of 78s, but ultimately got the reaction off of, you failed this auction higher, traded back into value at 44s. I think I even yeah, let me see. I think I took 2 trades that session. I took the longs off of 62, 64s. What was that? So that was this point of control, right? If we merge these two, you'll see this massive point of control here at 66s, 62s, where I tried scaling into a long, and the runners didn't really go too much, right? Like I scaled out because I thought it looked pretty weak, but stopped out the runners, and that's that level at 44 that we got a pretty decent move on. Um, Even excess can be seen on candlesticks. Yes, if you're looking at a 30-minute candlestick, yeah. When there's high volume node upper edge, and if we are entering on pullback, which time frame to use? Okay, so that's I don't really care about time frame, right? Like I don't care if I'm on a 5 minute or 1 minute. It might help you guys if you guys like waiting for some kind of confirmation. I don't like to wait for confirmation. I will just simply limit long at the level, right? Like this example, these last couple examples here on ES. Right, like I'm literally I have my orders here before price gets here, or I have my order sitting here before price gets down here, to avoid that hesitation of, okay, do I you react off it, do I get in? And at that point, like, price is going to be like 4 or 5 points, maybe it's like 2, 2, 3, 4 points higher, right, from your level. In this case, like, instead of me getting in after I see some kind of confirmation and then risking this low, which would be like 7 points, I'd rather just get in here, risk 3 points, 4 points, and get in. So um yeah, like I don't really care too much about time frame. Where my last couple of ES trades, took a freaking crazy loss there. Right, but like this example too, I'm scaling into long as price trades down into it. This one I tried to react, right, but took another dip into the low, and I didn't get involved after that. There's a loss on some limit longs there, limit longs here, right, where I'm just waiting for price to come down to my level, right? Like I'm ready to get long here when price is trading up here, or wherever it is. Okay, so I don't really care too much about time frame, but if you're waiting for confirmation or whatever trading style you guys use, like probably a 5 minute helps, right? If we're waiting for reaction off of a level. What do you prefer to trade and cure? I like both. It's just like a matter of like which level is more clear to me and which one do I like, which level do I like better. Like recently on NQ, like I took these because well, this one I took on both ES and NQ. Right, it's just ES. I stopped out the runner, freaking at this pivot low. I had my stop like right above this last low and got stopped out. But that's sort of the same trade, right? So sometimes if I'm in NQ, I'll just not take ES, or if I'm in ES, or if I like ES better, if I like the level better, I'll choose to get involved in that one. Right, this was a rare short that I took. This one was a reactionary one. It wasn't off of a level going into that day, particularly. Um, right, some decent limit longs there. I think, yeah, almost bottom tick this one at 355. Yeah, so if I'm in ES, like sometimes I'll like avoid taking NQ, and I don't need to be in everything at one time. What's the blue highlighted line? You're gonna have to tell me which one it is because I have multiple. You walk us through the process when scaling into a big zone. Uh, when you're scaling into a big zone, it's up to your risk profile. Like, what are you willing to risk on the trade? How big is the zone? Um, like for example, on this NQ one, this is like a 50-point range, right? So, and it happened uh into the close. Your RTH close was like up here, I think. Yeah, you closed here. Um, so yeah, preferably I get the reaction off of 235s, but then I had a really decent day this day, so I was like, I may as well just, instead of just eating this stop here, I may as well just add into 180. So it's circumstances, right? Like typically in a 50-point range, I would just eat the first loss and then just wait for 180. This case, I had a massive day this prior session, so I was like, let's just risk a little bit of this day's profit. And it was actually a decent amount of this day's profit that I risked, but let's just risk this. Let's not eat the stop there, and I'll just hold this position. Right, so yeah, it's really up to your risk. Like, if you like the idea off of 230s, 180s, just buy 235s or look to buy 235s, risk maybe 10, 20 points. Then, if you take the stop on that, just watch 180 next. What is your target and stop? Stop is typically, let's like 3 to 4 points on ES and NQ, like 20 points. I've recently made them a little larger only because you're getting larger ranges intraday. Um, sometimes like I'll go up to 30 points, but and target's like pretty simple. That's sort of why I do this is, you know, when let's say for example here, if I'm long 230s, 180, what's the idea? To take it back up to prior value, right? Which is in this case 315s, 330s. This session was special in that you had a little bit of you had a spike down. So if sellers really wanted to, they would have kept it below the spike, right? And kept pushing lower. So I think I took profit into 260s. Yeah, I did. Right when we tested this, I took profit into 260s, and then I wanted to scale into three or scale out at 315s. Couldn't really get it. Um, and I took one off before I went to bed. Right, and the others I just left with the stop down at like 210 to go see higher levels and last couple of targets. So um, sometimes we have to take it level to level, but the idea is like if we can get over this 315s, like it's going to be a pretty easy shot up to 400, 420s. Right? That's that concept of value. We trade back into value, we go see the opposite end, right? And if you get the breakout here over 400s, like where do you go next? Prior value, right? Or in this case, like the singles up here, right? Because there's, maybe we could test this high volume node on the composite here, 510s, 520s. But, I was focusing on more recent action and say, okay, let's go target these sets of singles. So that's how I make targets. Um, just levels, right? ES feels easy to read when NQ looks like a blob. Yeah, yeah. Sometimes I would say ES, if you're looking at a footprint, especially, is a lot easier to read. Um, right. Yeah, I mean sometimes like NQ will be cleaner up against levels, and ES won't be. It just depends on the day. I miss a star. What's the difference between auction market theory and volume profile? Is it the same thing? Auction market theory's overall idea behind it. Yeah, oh, I see that. Yeah, I'm not in a position. Yeah, I saw that on my profile and I was like, oh, what the heck is the difference between auction market theory and auction volume profile? Volume profile is just a tool to use to apply those concepts, right? Or we could use the the TPO, the market profile, right? And the history behind it is the TPO came out first because back then it was there was no real way of tracking volume, um, or it was very difficult and tedious to track volume and then plot it out in this fashion. It was easier to track where you traded and at what time, and then say, okay, this is we spent this many periods or 30-minute periods trading at this price. So, ultimately, volume profile is a newer version of this TPO. They're going to display, for the most part, the same ideas. Oh, we're trading into support on NQ and bounced off. Right, so volume profile is just a tool uh, that we then apply those AMT concepts to. What do you have to see to close your trades before they hit your target areas? Um, I don't do that too often. Like, I've tried to like be very reactionary, whether it's an entry or whether it's an exit. Um, it's just too much over analyzing at that point, like looking at each candlestick and like looking at the, in my case, like I'm looking at the footprint intraday. Um, it's just over analyzing, and then like you see like one little pullback, you see a little bit of exhaustion, and like you're like, oh, I need to exit this position. But I mean, you're looking at like 1 minute, 5 minute in that case, and it just gets you out of your trade too early. Sometimes, I mean, sometimes, right? Yeah, like it could not, like sometimes it doesn't reach your full target, or maybe even the first target doesn't tag. And in that case, like if you do happen to get that first target and it still continues to be weak, you might want to be taking off more into that first target. You might want to move stops a little more aggressively. So I'll do that in that regard. Like I'll adjust my risk. I'll take more off into some levels, into like the first level. If I see something that's weak, or if it's strong, I like to hold for a little longer. But I really don't like to be reactionary. I like to just come into the session with a plan, and then um, try to take things at least level to level. If not, like we don't necessarily have to be level to level, but um, we can go for those much further targets as well. Like if that's what the plans accounts for, right? Like if we have a huge area of value, like you can shoot for that opposite end. Is my stream buffering, or is that only for him? Okay. It may be your internet. Right, hopefully that answers your question, NJN. But how long do you typically hold a contract? It depends. Like the idea of the trade. Well, because when I get in a trade, I have an idea for where I want it to go. Um, I mean, it just depends on the trade. I mean, sometimes like I'll get in a scalp for the purpose of just scalping a couple points, ticks on it on ES. Um, Obviously, I prefer the much larger trades, and in which case, like I have a pretty clear idea as to where I want to take something. For example, like this one. right? Yeah, I ate a bunch of losses this session. I took one massive one. Um, but right, like I held this position, this at least this green position, the bulk of it for 100 points, right? And sometimes you'll see me get skill out of positions like as early as like 20, 30 points on NQ. That's when I'll do that. I'll be scaling out of positions early when buyers aren't in control and they have to take it level to level because I like to long. For those that don't know, I'll still long on trend days down, right? And you saw a couple of those examples on like ES where I'm just you get a trend day down, but you pick your spots carefully. And yeah, you don't. Sometimes you don't get the move you want, but in this case, buyers are not in control. I have to be taking profits quickly, right? On a bigger level like this, I can maybe hold a couple more, but even then, like buyers aren't in control at this point, so I have to kind of take it level to level. So it's all circumstantial in terms of like how long I'll hold something or how long I plan to hold something. Do you hold longer for NQs versus ES? No, it just depends on where you're at, where you're at on the chart. How do you adjust your sizing depending on the setup? Usually, where you size one for decent setup and something like three or even more for good setup. Higher time that makes you more inclined to use more size. Um, no, it's really just the main factor is the higher time frame setup. Um, if I'm fooling around or like just looking to get in something, obviously I play less size. But like on a big trade or idea I love, I'm gonna scale in. Uh, like this one up here, I used decent size on like all the trades. I mean, I had one like pretty big winner overnight. Um, yeah, it's this one I should not have been using the size I was, but I would say like if when buyers are in complete control and we're pulling back to that one specific level I'm usually paying attention to going into the session, I like to use size, right? And I'll do it blindly. Um, if I'm ever reacting to something, I use less size because I don't like those setups as much. I prefer limiting long. Uh, yeah, so it really comes down to like how much I love the setup, how clear it is to me, like in my head. Uh, like I think crude, I put on a ridiculous amount of size recently. Yeah, crude, I freaking shorted like 65 contracts. Um, I mean, I couldn't swing the whole thing, so I had to cover like pretty darn quickly. Which one was it on CLG? I need to roll over. Yeah, so I was scaling into like 65 contracts into this high. Yeah, I took a couple losses already trying to short this thing and then scaled out of most because I couldn't swing 65. I simply did not have the margin. And then took the last couple ones into runners. And the CLHs I actually covered this morning, right? Just so I could swing long if I wanted to hold for a little longer. I just swung the forward contract. Um, so and that play was based off of the daily, right? And if we look at this profile of this most recent action, you'll see that, right? I tried shorting 79.30, right, which worked this session, didn't work the following session. um, and then trades back into this prior area of value and rejects. Right, so that was the basis for that short. Um, let me answer these questions in order. Everyone has those trades that just get barely stopped and reversed. Yes, it happens to me a lot. Um, Depends how aggressive I want to be. Like I think last night I did the same. I took a freaking stop at the low on ES. Um, I just could not stick around. Like after I got stopped out, so I didn't re-enter. I just wasn't home when we traded back over 65. Um, so like this one would have been a fair one re-entering. Uh, sometimes like a level like price will just absolutely chop me up at a level. It doesn't happen too often. Um, but those days are rough. Like if it ever does like utterly chop around at a level, I can't remember the last example of that. But yes, I will re-enter if we like reclaim levels. I can't remember. Oh, decent example on NQ. Oh, this one actually. This one this is something you should never do. I just ate a fat stop at this pivot low, and I just rage scaled into longs for this little short or this little pop back up, and then I calmed down a bit to sort of put this back on. But in terms of like re-entering, I think I took a short. Yeah, so the idea was to be short up against 450s. Well, I actually was not planning to go short into this session. You just went up overnight, tested the 50% retrace off all-time highs. Um, and then got short on the back test of, I believe it was this 1 minute candle high and low of, I forget if this was retail sales, right? Had to re you faded your 30-second opening range high was up here somewhere. Um, Almost nearly came back to it, instantly rejected, got back below, so I reinitiated the short. So yeah, it's circumstantial again, like when I'm re-entering or if I choose to re-enter. Dumb question. Context wise, when you say buyers in control, is that the offer consistently being borrowed? No, that's context. Buyers in control. So, when you're looking at a profile, like there's, for example, in the context of this week, this upcoming week, the most bullish response would be to just trade back to trade over Friday's highs, right? But if we trade back down to this middle distribution, like buyers aren't necessarily losing. Can bears like flip this and take over? Sure, but that comes below 59.90. Um, so like going like this week, like I wouldn't like buyers. I would say would be in control even if you fill this gap. It's just a matter of what you do then. Like, do you fill this gap and keep going, or do you fill this gap and pop, or maybe fill the gap and then like come down a little lower into this shelf 90 and then pop? Buyers would really have to defend that shelf or this gap for them to be in control. So yeah, to me when I say that, like it's context. What do you mean blindly when you size? Or is that also feeds interest and go large? if we're losing levels, well, recently I've actually been putting on. I've been able to put on the size I want, or at least like pretty decent size, only because like I think buyers have been in control for the most part. Like even on this like downtrend day, I put on some decent size because the greater overall picture was you filled this election day gap at 58.13. I did not trade this RTH session because I thought the lows were a little too poor and it like retested it so many times. I simply just waited this session out and said, okay, let's wait for the next session and let's see if pullbacks are bought. So, like the context of us filling that gap and having this double distribution like gave me the confidence to put on size here, risking like 3 points, 4 points, and trying that long at 62s, risking 3 4 points with decent size. So yeah, a lot of it comes down to context, and that's why I talk about or do like quite a few lessons on context itself, right? So like at that point, like I'm like uber bullish if we're gonna be holding this, or if we're gonna be holding this. So like going into this session, I'm like, okay, if dips are bought, I am very, very confident in longs like the rest of the week. And then guess what happened, right? So I made a huge chunk of money last week. Um, both ESNQ and obviously crude helped. Um, so hopefully that sort of explains like my sizing decisions. You trade on personal life. I trade on personal for the most part with AMP. And the only prop like I have used and do use is top step, right? But recently I've struggled with like taking the same trades on top step only because I'm playing so much size, and like I first have to get positioned myself, put my orders in, and then I have to. Well, the limit longs, yeah, I have a pretty easy time copying those. But then I have to get the alert out and the channel sort of, put out some context behind it. And then, that's like my second priority. And then my third priority is, the top step account. With your standard 30s, max stop loss, and even you still struggle with it. Yeah. Yeah. I mean, sometimes levels won't hold. I mean, like, we can go back and look. Right? Like, sometimes, let me switch to a 5 minute. Yeah, it might take some time to load. Are we done downloading yet? No. Yeah, I think most of the examples are on NQ of me like entering and then re-entering, and let me find a couple. Oh, it's gonna do this. Okay. So here. So I think this we sold off pre-market. Once we lost this level, I think. Yeah, no, I woke up. We lost the level, and I was like, I'm just gonna go back to bed because I'm not gonna get involved long. Like, and yeah, I'll leave limits down here. Um, it would have been nice had we traded down here. But so I woke up late this session. We're trading back into levels of resistance this session. So like I'm just shorting each of these little pops and taking stops. Took another one here, which was a little more reactionary as opposed to a limit. And then I was like, okay, let's just. I took a lot. This was like one lot, I think, or two lots. And I just was like so pissed off with what happened here of me just putting on size and only being able to cover for a little bit. Then I just like put on a long, just stopped watching for a bit, and I realized I was down like freaking 70 points in like 10 minutes. Tried another long here into end of the day, and then I was like, you know what? Fuck this. Like I think the main idea is still you lost some important levels this day, rejecting opening range highs. So I'm just gonna swing short, right? And scaled in there, and, covered into most of it here, right into prior session's value. Um, and then took the last one off at 700. I'm glad I didn't put it at 665, which was like the exact level I wanted it to get long at. I had limit buys at 665, but I had the cover at 700, which I'm glad I did because that was your pivot low. So yeah, there are times like you'll have to re-enter, and your idea might be right. I think the most important part is like if you are wrong here, um, that if this does keep going up, that you don't keep shorting it, right? The only reason I put this on, like, let's disregard this long, but I kind of made that mistake of okay, we're pulling back into some kind of value. Like I'll try a long here, and it's like I failed. I was like, let's just flip short, and I'll just swing short, right? Because the main overarching idea here is lost a really really important level and rejecting some intraday levels. Right? Oh my gosh, this is an ugly session. Uh, I don't even know what goes on here. But yeah, sometimes you'll see me like try to get in trades when I'm looking. These are limit longs. These two down here and this one. But these ones I tried to be reactionary off of levels, and like I'm getting in late. Like you get the wick low off of something, and then you pop back up over levels, and then I'm reacting at that point. And like these, I have to risk a little more, right? Like because usually I like to risk the last pivot low or the last little area of where volume came in. Like even on these losses, like you have to eat a little bit more than I would have preferred, as opposed to like longing here and risking like 15, 20 points, longing here risking 20, 30 points. uh, yeah, like when I'm reactionary, I tend to do a little more poorly than when I limit long. Like these are limit longs, this is a limit long, this is a limit long, this is a reactionary one that I just thought would keep going, scaled into it, even added on the little break higher, and got stopped. So yeah, when I'm limit long, I just do so much better than when I'm reacting off of levels, right? Like limit longs here. I think this one was I was reacting off of, right? This was a limit long, reacting off of it, like after eating the stop and reclaiming the level. So this was a limit long that sucked. I did not think we'd freaking. Actually, I know I'm missing data still. I don't know how to load data again. I'm missing like a 10-15 minute period here. Right, limit long fails, reactionary, limit. No, this was reactionary. Reactionary that fails, limit long that fails, and then re-enter. So yeah, if it takes me out and like bottom ticks me, like I'll usually just re-enter. Like what if it pops back up over the level? Oh, this is a fat loss. No, oh no, not that bad. Okay. In the you would analyze trade the indexes. Oh, on TV. Yeah, you can. right? And for example, let's go to hourly. I prefer if I'm using TradingView. Well, I actually really don't use TradingView. It's just what I tell people that want to use TradingView. Is to use the fixed range one, right? It's under the long position tool. I think that's like the default. Fixed range one, you select your starting and ending point, right? And it gives you a profile. You're gonna have to move the or change the row size